Hey folks, Nev here from One Deal Away. It's been a little while since we've done one of these whiteboard educational sessions, and I figured I already got dressed up to get to work and do some stuff today. Why not use my fancy clothes to do some videos and some education sessions and so on. And if my voice is a bit jagged today, I apologize. I have been on some version of Skype, Zoom, a conference call, a phone call since about 5:15 a.m. and right now it's about 6 p.m. So we're talking, what, 13 hours of yabbing. So that's right. I have been chatting with folks, and I said yabbing, it should be yapping. So there goes my ESL kind of showing up. What I wanted to do today is kind of explain, I've been having some questions about, when can we jump back in real estate? You've done some confusing things where you talked about go in, don't go in, like what should we do? So, first thing first, I want to point out that today is May 12th, 2020. So for reference point, this is the date that the video is being shot, recorded. It may or may not go online at this particular date, but when you watch it, I want to make sure that you understand what point of time am I creating this video and when it is exactly that I am talking about some of these things. So a question has come in of, do I buy, do I not buy? Because in one video you said it's time to cautiously go in and get some of the properties, but in another video you talked about it's not time to buy. So which one is it? Well, both are actually true, and part of it is that it just depends of how you actually buy and what you're looking to do. So here is what my, I don't want to call it prediction, but in a way it sort of is, right? It's sort of the educated guess. Because unemployment numbers are high, everybody already knows that. We have 35 million people unemployed right now. The debt is going through the roof. The printing is going through the roof, right? Like everybody's doling out money. And unfortunately, all of that doling out is not necessarily reaching you and I. I mean, yes, there was that paycheck thing that kind of came through of $1,200. It was a one-time thing. Most people have already spent it. Some people haven't even received it. That's a big problem, right? Right now, all of the money is going into the markets, and that's why you've seen, unemployment numbers go this way, but you also seen the stock market goes this way as well. And you're going, it doesn't make sense. This is not priced in. How does that even work? Well, it doesn't really work. From fundamental analysis, when you look at the facts and look at what's going on, it doesn't make sense. What does make sense is the market is going up is because all of the money that is being printed, not all of it, but a large chunk of the money that is being printed is going towards these large businesses. And the Fed now has created this special purpose vehicle, SPV, that they basically put the money in, and that SPV, which special purpose vehicle is like an entity that has a specific purpose, a special purpose, and that particular SPV purpose is to start buying ETFs of falling angels and companies that are not performing well, they cannot perform well, their cash is down the line, they would probably have to shut down, they might be going through bankruptcies, the whole 9 yards that is going on, but the Fed is wanting to save them. So that's why you're seeing some of the prices go up. That's the reason why. Partially because they're buying, but they haven't been buying until now. They actually said that today they're actually going to start officially buying it. They've been talking about it for a while. I want to say almost a month, y'all, if not even longer. However, they haven't done it. The market has performed because the market banks on sort of what they're going to do. They think of what is going to happen and they try to front run it. Meaning, if I know that you wanted to buy this house, right? and you were willing to pay $100,000 for it. Well, if the current owner said, I'll sell it to you for $90,000, and even if it's not worth $90,000, I will buy it, because if I know that somebody's going to buy it for $100,000 from me, that's an easy $10K, and why wouldn't I do it? That's sort of what's been going on inside the market. But that is not what I promised we're going to discuss over here. What I did promise is that we're going to talk about what did I mean of like it depends on what you buy. So here's kind of where I see it. So you have a house, right? And this house, I think the average is, depending on who you ask, is like 250 to 315,000, depending on kind of like how you run your math. That's really what it is. It's not necessarily that the house is more valuable or not more valuable. It's just sort of like how you run the math that numbers may shift. So this particular house is $250,000 to $350,000. That's the sort of average of what's going on in the United States as of 2020. Now, the part that is challenging with real estate is that real estate is not sort of tracked like paper assets where you can log into some sort of site and see it constantly kind of go up and down, up and down. It's sort of a little bit different. It's a bit slower. It's a bit boring. Nobody wants to sit there and be like, nothing happening, nothing happening, nothing happening. Like, you don't give up. That's why it's not being traded the way that stocks or bonds or ETFs or even crypto or currencies, any currency whatsoever, is being traded, because it's a bit of a boring market. It moves a little bit slower, but that's good for us as investors. Now, the real estate is actually affected by employment, right? Oh no, the market is, all right, let's try a different one. Maybe this one is alive. Okay. There we go. We have a live market. So employment number is going to matter a lot, because employment is derived, right? Not derived. Because employment depends on income. Okay. Now, it's also affected by interest rates. Okay. And it's affected by what is known as sort of the liquidity of the money, right? Liquidity. This basically means the money that actually can borrow. So what we're seeing right now, and I've done a few different reports, and maybe you didn't connect the dots, but liquidity is important because the interest rate is like 0%, for example. It's not 0% right now, y'all. It's like 3 point something for 30-year fixed loan. But even if it was 0%, somebody actually has to be willing to lend you money. And what we're seeing is that there's this lending tightening that is happening, which basically means that liquidity is going away. So what happens is that when you have employment numbers go down, meaning high unemployment, the interest rates matters, but it is heavily correlated with liquidity. So if you have a low interest rates, yes, more people will want to buy, but somebody has to borrow the money. Right now what we're seeing is that banks and non-bank institutions that typically lend money for mortgages and such, they're not so hot on it because they're afraid that the price is going to go down. And guess what? Because of this and because of this, because they are stopping the whole piece, and there's a high level of uncertainty. Okay, high level of uncertainty, the prices will have to drop, because when you don't feel certain that this price is going to stay or potentially go up, you're not quite sure that you want to buy it. If you're not quite certain that you're going to be able to keep the job and keep the income, you're not going to quite buy it. If you're not quite certain that you're going to be able to get the loan, you're not going to buy it. And the same thing goes for lender. If they were like, I don't know if this guy is going to keep the job and have income and be able to pay me back, and if the underlying property and asset is going to stay up in the value, I'm not going to lend it, right? So they're trying to protect themselves from the risk. All of these things combined, plus some additional components, is what's going to drive the market price down. So if you're looking to buy a traditional home just for yourself, or maybe even traditional house that you're going to rent, it might not necessarily be the best time to buy, because even though the rates are pretty low, and I expect them to go even lower, liquidity is sort of shut down. It's kind of hard to get financing either for first-time buying or even as an investor or even as a homeowner or refinancing or any of that stuff, because there's all these other pieces I've talked about in one of the previous videos. You should definitely watch it when I talk about sort of what's going to happen with the real estate market and kind of how Airbnb and then inability for travel or unwillingness and that kind of stuff is going to affect the market. Well, guess what? That's all part of real estate as well. So when you have all these homes that hit the market at super low price, that affects everything else, because real estate is really calculated on a comparative analysis. What that basically means is that what I do is I will take a look at other homes that are similar within a neighborhood, right? So for example, you have a neighborhood right here. So here is our property, right? But then you have all these different homes around here. And what I like to do by the comparative analysis is I look at the price of this one and price of this one and price of this one and so on. And then I get some sort of average to give me what the price of this particular home that we're looking to buy should be. That is how prices are actually calculated, or values are calculated within real estate. So if I know that there's going to be a lot of homes within a particular market that is going to show up and they're going to be priced super, super low and they're going to be dropping in price because of all these different things, then there's a high probability that this particular house, which is this house right here, the X, is going to go down, right? It's sort of that simple logical math that most people can understand, right? That is the reason why the lending and everything else is going on. And so if that's what you're looking to do, to sort of buy that traditional home, I'm going to say give it a hold on, wait if you can. I mean, if you need a place to live, you need a place to live. And if you can't find a good rental, you're not happy with it, I completely understand, right? I mean, I get it. Everybody has to have a home. But if you can hold on, especially if you're an investor, it might make good sense, especially if you're buying on-market deals, meaning it's already listed through MLS, it's already listed through a realtor, it's already on Zillow, it's already on Trulia. You're able to find it all over the place. Then it might make sense to give it a bit of wait, because as all of these properties start flooding the market, and that should be happening over the next roughly 6 months or so, the prices are going to start dropping. As the prices start dropping, we might see actually even lower interest rates and potentially some folks saying, you know, we should probably stop coming in and start buying. And you might also see a federal government sort of pushing the banks, pushing the non-bank institutions to say, you got to lend money. You got to lend money because we're going to go down super, super bad. We're going to crash. So that's kind of where the piece comes in. And so if you've heard me saying like, hold on to it, don't buy it, this is the reason why. Now, I'm going to clear the board and I'm going to explain what properties might make sense to buy. So let's do that. All right, so it's still May 12th, 2020. I wanted to keep it so that it's there for reference because, you know, things are moving so quickly and there's all these different videos. And so you watch something and you're like, this is an outdated information. Like it worked for the time, but it doesn't work right now. So I want to make sure that I keep the date so that you understand of when, at what point in time am I talking about these things. Now, so I just mentioned that, you know, for the things that the traditional way to buy a home might not necessarily be a best time to do that right now. However, there are properties that are going to be listed and that currently are listed right now that are called off-market. Now, off-market means not necessarily that they're like a secret sale, although potentially could be secret for most people, but it basically means that it's not listed on MLS, it's not listed on Zillow. Most of the realtors won't know that. It's typically going to be listed by private sellers to private buyers within particular private networks. You might have a wholesaler, which wholesaler is basically a person that is kind of like a networker, right? They know all these people that have properties and they know all these people that want properties and they kind of connect them together, right? That's sort of kind of what they do. And of course they make money when they do that stuff and when deals happen, so they make a small commission on that. Similar to real estate agents, but not exactly the same. So don't confuse the two. One has to be licensed, one doesn't. And there are these like fine lines that if you decide to do that, that you kind of have to follow because you don't want to violate any laws or rules whatsoever, right? That's just my take on the whole thing. You always want to be on the right side of the law. That's at least how I like to play. Everybody can choose their own destinies, but that's the way that I like to play. Now, the second piece of off-market deals are also sometimes you have an investor who wants to sell, but they're not listing with an agency per se. They might know wholesalers, they might know other investors because they're all connecting together online or through conferences and that kind of stuff. And so that's where you have these back of the room deals. And I hate to call them back of the room because whenever you say that, they were like, something shady is going on. Typically, there's nothing shady going on with these particular businesses, although sometimes, it possibly could. The third part that also happens that is off-market is foreclosures. And foreclosures, you have a couple different kinds. The most popular kind that many people are familiar with and that we're going to experience in high numbers, most likely in the upcoming months and most likely years. When I say months, I don't mean like 2-3 months. I'm talking like 6, 18, 20 months or so, right? So a little bit longer term. The second part that some people know about, but some people don't, are called tax foreclosures. Tax foreclosures, I've done some of the videos where I explain kind of what it is and how it runs and how it functions. And it's basically you have a county, right? There's a county, and county has all these different properties, right? And in order for county to actually make money, they charge property tax, right? So all these properties have to pay the tax. If this particular property doesn't pay the tax, the county sends them a rather mean letter that says, you owe us money and we expect you to pay it. And if the owner doesn't, then they take the property and then they list it on the market, which nowadays it's mostly online. So there it is. We have a house that is listed online and it typically sells at auction. And the price that this particular property sells for is the amount owed on taxes. Now, if you know anything about taxes, you will understand that taxes can run, I don't know, anywhere from like 1 to 10% plus minus on the property value. So if the property is valued at $100,000, that house might be actually listed for $1,000 if you can believe it. This is the type of property that I'm talking about might not be the worst idea on the planet to be very cautious and very selective to go and buy on. Because of the high uncertainty, typically these things are called auctions. That's how they sell. They sell an auction, okay? And some of them are very much similar to that, like what you've seen on TV when somebody goes, rah, 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 and you don't even know what they're saying. And then people just start raising their hands. You're like, I don't know what's going on. This is silly. This is ridiculous. I'm not doing anything. Some of those actions are that way, but most of the actions, auctions, not actions. Well, actions and auctions. Auctions are actually online. So that means you log into a particular server, you put in a deposit, you click a few buttons, and you're done. So it's not that high pressure craziness thing going on. Although some that are live, you should definitely go and check them out if you have an opportunity. And I suggest sitting on your hands for a few moments because any slight movement and you just might have bought something you didn't want to own. So something word of caution for you. But they go on auctions, and so typically auctions get, they're not as popular as some of the other things, but they can get fairly popular for some of the locations. Like, for example, if I can go in, one of the properties recently that I saw recently is like maybe 2 months ago, Oakland, California. Now, Oakland, California is not necessarily like the hottest thing ever, but there are portions of Oakland that are right across the bay from San Francisco that are actually okay. Some of the areas of Oakland, not so much, but this particular area was okay. It was about 1 acre of land or so that is easily developed. You could put a multifamily property that likely in that area, even now in 2020, would be worth millions, but you could buy the property for, I think the sale price was, I'll lie to you, y'all, but I want to say it was like $10,000 or something like that. So if I can buy this property for 10,000 and get a contractor to build something for like $500,000, right? So I'm out $500,000, but I bought something that now is valued at like 2 to 3 million. That's a huge, 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 huge gain, y'all, right? So that's kind of what's possible with some of these things. So what ends up happening is that because of the high profitability within the stuff, these auctions at particular areas could get, that are popular, right, could get pretty busy. Now, because of the high unemployment, high levels of certainty, we're not quite sure what's going to happen. We don't know what's going to happen with prices, all of that stuff. Many of the, I would call it novice investors, have stepped out. Many of the investors that were overextended stepped out, and many of the investors who are not necessarily making money because their tenants may not be paying them if they're relying on that income and that kind of stuff, or if they're flippers, they're not able to flip anything right now, so they're tied up for cash. They can go and participate in these. So what we've seen within the auctions is that the numbers are dropping like badly. And so whereas before you would have a property, right? So you typically, what ends up happening is you have a property A, property B, property C, and so on, right? And you have some of the properties that are really good, some that are really bad. So say this one, like nobody even looks at it, like nobody's even interested. But this one and this one, people are like really excited. And so, you know, if this is listed for say $1,000, you know, people end up bidding it up, and it might sell for like $30,000 because it is super popular and people see a value in it. Because if I have a property that is valued, let me draw this, at 100K, right, $100,000, but I can buy it at $30,000, even though the starting price might have been $1,000. It's super worth it, right? Like everybody knows that. Everybody knows that if I can buy this shirt that typically would cost $100 for like $10 or $3, like, yeah, of course I'm going to buy. I'm actually going to get two. Thank you very much. So I had to adjust the camera, y'all, because I realized you can't see this stuff. So this is what I was talking about, the $100,000 that you can buy for $30,000. So it gets bid up. But what we have seen right now is something remarkable. The number of people, these are still good properties, they're still popular properties, but the number of people has dropped down so much that some counties have actually canceled altogether. They're not even participating right now, but they will be. They will be coming up this fall. They're waiting for the economy to open up, for counties to open up, for courts to open up, for all of that stuff to open up, and for people to actually go in and start bidding. So we will see the increase in these things, but I don't think we're going to see an increase in as many numbers of people that are going to participate. So now what I have been able to see is that you will have this property that is listed for $1,000, but it's still worth $100,000, and nobody except for you is bidding on it. Well, guess what? When you're the only bidder, the price that you pay is the price that is listed, because what are you going to do? You're going to log in twice and bid against yourself? Of course you're not. Nobody's going to do that. So this is the part where I say, if you're able to get into some of these auctions, find the properties that are really good properties, that have a great location, that have a great potential, that right now are so much higher valued that even if the price dropped, like let's take an example of this one, right? Even if the price dropped 50%, which, you know, is something that is possible, right? That means that this property would be valued at $50K. Well, how much did you pay for it? Well, you only paid $30,000. That means that you're still $20,000 up in what you paid versus what the price of the property is, or as we like to call it, the market value. This is why I said, if you can find something like this, where you can find some amazing deals, and you know what you're doing, because you got to be able to learn how to research this stuff. If you don't know how to research this stuff, you will potentially buy something that has zero market value because you'll buy something that might be landlocked, that might not have any use, that might not be able to do anything, and nobody else wants to buy. So your only hope and pray is that you have a greater fool theory happening behind you, meaning that there's a greater fool than you to go in and buy it from you. That's the only way that you can make money. You don't want to do that. You don't want to go off of the hope and pray mentality, right? That's the reason why most people are stepping out of the crazy stock markets. You're like, this is insano. You know what I mean? Like all I can do is hope and pray. And you know, who knows? I can hope and pray and nothing happens. And then I don't hope and pray and the market goes up. Like it's just completely decoupled from what's going on from the reality, right? We all know that now. I mean, I hope you can see that by now because you have 35 million people unemployed and then you have like stock market like going up. Woohoo! What? How did no, it doesn't work, right? So that's what I'm talking about. And sometimes you have like super low unemployment, everything is great, but the market keeps going down. You're like, how did that happen? Like I must be the unluckiest person or this just doesn't work. I don't think it works, but that's just me. Anyways, so this is the reason why I said, if you're going to buy something on market full price, I would say wait. Don't buy now because in about 6 months on the low end to about 18 months on the higher end, we're going to start seeing much, much lower prices, and that might be time to actually buy. But if you know where to find these properties, if you know how to research them, if you know what you're doing and you can evaluate the properties and you can get them for dirt cheap, this could be an excellent way for you to go in and actually get properties right now, be able to purchase them and do stuff and actually benefit from many people who are going to be selling their homes and looking for rentals. Because people that cannot afford a mortgage will have to foreclose, unfortunately, and they will need a place to live. They'll have to have a place to live, which means that they will become renters. So renters is going to go up. That number is going to go up because just because somebody loses a home doesn't mean that they don't need a place to live, right? They will need a place to live. So if you're able to purchase something at super, super low price, like for example, $100,000 property is a nice property for $30,000, maybe you put in another $10,000 to fix it up, and now you can rent it for, you know, $500 a month, which I would say that's super affordable. But even higher, you are making a nice chunk of change and great return for your money. If you don't know how to do this stuff, and if you would like to learn of how to do that stuff, there's actually a link right here below for my Real Estate on the Cheap challenge. You're welcome to go check it out, learn more about it. I think you will be shocked to learn what the cost is, and please understand that the price that you pay does not equal the value. Just like these properties, it's set up exactly the same way, and it's set up to teach you how to massively benefit, not just from current economic piece that we're in, but also of what's coming in the future. So there you go. If you know what you're doing, that could be a great way. If you don't, and you want to learn how to do this, because this strategy doesn't just work now in May 12th of 2020, but it works also in 2021, 2022, 2023, and the upcoming years are going to be even better when it comes to these deals. Yes, the number of people in auctions is going to go up, which means you got to get smarter and faster, but the number of properties and the quality of it is going to go through the roof in the upcoming months and years. And so now you can either go in and practice right now and get some amazing deals that nobody else is buying because they're not there, or, and maybe end would be a more correct way, also learn how to do this stuff, position yourself for the future so that when things shift, when things transition, you can actually massively benefit from the change, from the shift, preserve your wealth and potentially grow it. And then when the whole lending thing opens up, my gosh, that's when we can go crazy. And I will explain in the next video, so make sure you tune in for that. Thank you for watching. Until next time, stay forever money blessed, and do remember, you are only one deal away. I want you to be happy. Don't you want to be happy? I want to be happy.